Russia has raised interest rates to 20% in a dramatic attempt to stabilize the country's financial markets. Russia's finance ministry also says it would order companies to sell at least 80% of their foreign currency earnings on the domestic market. Russia's currency fell to record lows today after the country's major banks were banned from the SWIFT global payment system. In Asian trade, the ruble depreciated to a record low of 119.5 against the US dollar before recovering to 110. Stuart Smith has more from Moscow.
Latest round of sanctions, particularly focusing on Russia's central bank, in particular being absorbed there by the ruble, because what is now possible is that Russia won't have access to its hundreds of billions, or at least a proportion of its hundreds of billions in its reserve fund. People are definitely noticing, and those following the news are paying attention and trying to take measures, with people attempting in Moscow to try and withdraw US dollars or other currencies which are not falling to the same extent. But it is very, very difficult now in Moscow to find foreign currency and to change rubles into foreign currency, because most of the country is trying to do that with the fall in the ruble's value. For an insight into how this latest economic damage is being portrayed, consider yesterday evening on state television the presenter suggesting that isolationism may be the future here for Russia. He said, "We'll overcome it all, we'll endure it all, we'll rebuild our economy from scratch, an independent banking system, manufacturing and industry. We'll rely on ourselves." And again, on Sunday evening, that concern about nuclear war. Russia's state television presenter, they're talking about, why do we need the world if Russia won't be in it? Scary words for people in Russia, especially because right now the economy is looking very weak, very fragile, although the Russian central bank says it will take all required measures to ensure the economic stability.